Yo, what is going on, guys? It's Justin, and this is a highly requested video that I've been getting on how do I form my daily bias. Going into the day, what do I look at? How do I form a bias? So we're going to be going through exactly what I look for, everything I look for going into market open. So let's get started. First thing I like to start out on is I want to go from higher time frames, work my way down, right? You got to think of the charts as a sort of a roadmap, and you got to zoom out a little bit first to see the overall direction of the market. So first thing I like to do is go to a weekly time frame, and I like to draw out whatever the swing high is or the swing low, right? I want to draw in my external liquidity levels. So going on the weekly here, we're going to be charting on ES today. On ES, going to draw in my high. So if we can see and we look at a weekly time frame here, we can see we've been in this bearish trend, right? We're forming lower highs every single time. So I want to draw in my significant highs, my significant lows. So first thing I see, right, is I want to look at whatever range that we're in right now. You can see if we draw in the range we're in right now, we have our external buy side liquidity and we have our external sell side liquidity here, right? So this is what I kind of want to know here. So we can see the draw is either going to be the high, the draw could be the low. Now, I would most likely expect the draw in a bigger time frame to be the high because we've swept this internal low first. So now we kind of get, zoom out a little bit. Now I want to zoom into the weekly or the daily, sorry. Go down to a daily, and I want to draw in the same thing. So I want to look past and see, all right, what highs were swept before? You can see every single time that we have a previous high that was swept, we then retrace back and reject lower. We had this high here. We took liquidity from this high and then immediately sold back off. Then we had this high. We took this high and then immediately sold back off, right? And now we have this high. So this is now my buy side level that I want to pay attention to, my buy side liquidity. Okay, and then what's my sell side liquidity in this range? Well, my daily sell side liquidity would most likely be this low right here. So now we're in another range, right? So on a weekly time frame, we're in this big range. We have external buy side, external sell side, and now we're zooming in on a daily. We still have external buy side, external sell side. So this is what we want to zoom in now, right? So we're in this range here again. So now we want to zoom in on a smaller time frame. Now we go to the 4-hour. Now we go to the 4-hour. Now I want to do the exact same thing. What are my big lows, my big highs that I want to watch? Well, first thing I want to draw in is this low right here. And the reason I'm drawing this in right here is because this was our most recent low that we just swept liquidity from, right? We can see we were chopping up, never ended up breaking that buy side level, started selling off, and then we just took out this sell side liquidity level that I'm going to be wanting to pay attention to. This is going to form my bias. This is something I'm going to want to pay attention to. So then we also have some lows down here, a lot of lows, but I don't really need to draw those in right now because we are on a 4-hour time frame. We're not going to see that area, touched for a little while. So I'm just going to draw in the most recent low here. So I also want to look at a daily time frame. Going back to the daily, I want to make sure that if there is any sort of PD array, like an order block, a fair value gap, whatever sort of area we're in, I want to see if there's a bigger time frame area there. And number one, if we look at a weekly time frame, we can see that we actually have a weekly fair value gap that we're pulling back into. So we have a weekly fair value gap here that we want to draw in and make sure that we know this, right? This is an area that we could definitely bounce. And the reason I'm more long biased here is because we have not yet taken this buy side level and we haven't taken the external buy side level on a weekly time frame. So if we're thinking more long term, my bias is going to be more bullish since we haven't taken buy side liquidity yet, right? So zooming back in to the 4-hour, we have our weekly fair value gap here now. We have it drawn in a weekly. We know what it is, something we want to keep on our charts, right? So we also want to look to the left. Notice there's not really a lot of, stuff here that we can base any action on. We kind of have like a little bit of an order block, kind of some small fair value gaps here and there. But the biggest thing I want to look for is if we have something on a higher time frame, that's what I want to draw in. Notice we also have a daily fair value gap. Now, I'm not going to draw this in because we have the weekly fair value gap, but actually sometimes I like to lower my time frame. So if there's a bigger fair value gap on a weekly or a 1-hour or whatever it is, you always want to zoom in a little bit more and see if you can pinpoint wherever the most draw would be. So in this example, we have a big weekly fair value gap, but we also notice that the daily fair value gap aligns with the weekly fair value gap. So in this case, I would use the daily fair value gap because it's smaller and it's going to be more precise than the weekly fair value gap. So draw on this daily fair value gap. All right. So now that we kind of have, our level set in, we have our external sell side, internal sell side, whatever it is, I want to now zoom into a 1 hour, right? These are the time frames that I actually am going to trade on, right? So the bigger timeframes are important to understand, overall market bias, but I'm not trading on, those big timeframes anyway. So it's important to mark it out, but you don't need to pay attention to it as much as, the 1 hour, 30 minute, 15 minute. Those are the timeframes where we really dial in, and that's where we get our bias from. So my bias going into, so this is today, this is Wednesday, April 26th, I believe. And we can see we just sold off on this low. We had a big sell-off. We just took sell-side liquidity. So my bias here already is going to be long biased. And the reason I am long biased is, again, going back to bigger time frames. On a 4-hour time frame, we still did not take liquidity from this high. So this, to me, would be the draw on liquidity. Now, when I say the draw on liquidity, it's very, very important to understand and build confidence with what you believe the draw on liquidity is, right? The market moves in areas where we are always projected towards something because we need to grab liquidity, right? We understand market makers move the market, and without liquidity, they can't cover their positions to actually, put capital into the market. So when we see, highs and lows being swept and then reversing, that's when we see all that liquidity being taken from those lows where stops are being placed by retail traders for then market makers and institutions to cover their positions and then reverse the market back in their direction. So to me, in my opinion, for us to head lower, we need to come up and take this high first, and then we can see more drawdown. So starting here, my bias is already long. We've taken 4-hour sell side, and now, again, what happens when we take sell side? We have to go to buy side. So if we're looking at a 4-hour, what's our next buy side? Well, our external level would be here. So zooming in now, we go to the 1 hour. So we have our, bigger time frame set. So one thing I also want to look at is I want to pay attention to ES and NQ. ES and NQ are going to be the biggest things that you need to pay attention to. That's the only thing I trade. I don't trade Forex. I only trade ES and NQ. And the reason is because a lot of my trades use, ICT concepts based off of ES and NQ, like SMTs. And I plan to do a full video on SMTs alone in the future. So be on the lookout for that as well. So again, here, going to NQ, we want to pay attention to something. And the biggest thing that I want to pay attention to is, again, starting out on NQ. I won't do the full rundown of every time frame, but I do want to draw on the bigger time frame PD arrays, right? We have a daily fair value gap here that we're still continuing to hold. We've swept internal sell side liquidity from this low, right? This is what I want to draw in. This low is now swept on NQ. So what is my bullish now, or my bias now? Now that we've swept sell side liquidity on a bigger time frame, the most next recent swing high is most likely going to be the draw on liquidity. So if we're looking at NQ here and we see that this high was swept, what was the most prominent high after that level was swept? For me, it's this high right here. Now, it wouldn't be this. It wouldn't be this. It wants to be a swing high, right? You'll know it's a high. You should, it'll be clear to you. For me, this is a clear high that was put in. We have not really put in a significant high since then. So this, to me, is the draw on liquidity. Notice we also have a 1 hour fair value gap here that we're continuing to hold. And I think that this is now bullish. So the reason I want to look at ES and NQ for my daily bias is if I'm going into tomorrow or going into today, whatever the day is, I want to see if there's some sort of SMT divergence, right? So sell side liquidity has been swept. So I automatically have a bullish bias, right? We've retraced into daily fair value gap. I'd want to see the market starting to recover those losses that was made in the last couple of weeks and start bouncing back to the upside. Notice at the lows on ES and NQ, if we're looking at a 1 hour on both ES and NQ, you can see that ES swept this internal level and formed a lower low. But on NQ never ended up taking that same low on ES. So what is this now? This is an SMT divergence. So an SMT divergence is a divergence between ES and NQ, where one or the other is either forming a lower low, one is forming a higher low. That's a bullish SMT divergence. If it's bearish, it's from the highs. One is forming a higher high, the other one is forming a lower high. So we can see at this exact same point in time, ES is forming a lower low while NQ is forming a higher low. This is very bullish. So this is giving me even a more bullish bias going into the coming days. So we have a daily time frame that's bullish. We have a 4 hour fair value gap that's bullish. We have an SMT on a 1 hour that's bullish. We know the draw on liquidity is going to be whatever that most recent high is. Now, if we're looking at ES, we have that high on NQ. If I'm looking at ES, what I would consider to be low-hanging fruit, which is, the obvious draw, like not giving it too much room. But for me, the first high that would most likely be taken is this right here. And this, to me, is now the draw on liquidity. We have an SMT formed at the lows. We have a lot of room to push up. We just swept this big external sell side level. We're in a big fair value gap on the daily and the weekly, and we're forming SMT at the lows. That is telling me we're most likely going to bounce. That's what I want to see if I'm trading. I want to see some sort of low being swept, some sort of high, an SMT. Now, it doesn't always have to have an SMT, but that adds more confluence. So now that we have everything we have right now. So now zooming into a smaller time frame, because I normally trade off of the 1 minute and the 5 minute. So now I want to draw in my internal liquidity levels, which is saying I want to draw in, my 15-minute highs, my 15-minute lows. So if we're looking at NQ here, we'll pull ES to the side. If we're looking at NQ, I noticed that my most recent high that was put in here is going to be this right here. So this is going to be my internal buy side level, and this is going to be my internal sell side level, right? So again, we're putting ranges inside of ranges, right? That's what we want to do. We want to notice what the highs are, the lows are, and we only want to take trades when those levels are swept. If we are in this range, there is no trades until one of those levels is swept. Now, there are some ways that I do trade in these ranges if I have more confluence on a bigger time frame. For example, in my opinion, this to me is an obvious draw on liquidity, is this buy side. In my opinion, this will get hit 90% of the time more than this level will be hit. And the reason is because on a bigger time frame, that's what it's telling me. If we pull up ES here as well, we have those SMT at the lows. We get a big displacement candle up. We have a big fair value gap here on the 15-minute. I would expect this now to retrace into the fair value gap and then hunt buy-side liquidity, right? Because we're bullish on a bigger time frame. We have an SMT. We're holding a 15-minute fair value gap, or a 1-hour fair value gap, sorry. We also have a 15-minute there too. Let's draw that in. Remember, always precise your fair value gaps. If you can, go to a lower time frame and see if there's something else there, right? So if we look at a 15-minute, right? We have this 15-minute. Let's just go to a 5-minute. See if there's anything more exact. Now, 5 minutes actually a little bit bigger. So in this case, the 15-minute is what we want to draw in. So if I was to go into the day on NQ, if I was to wake up and I see this kind of market, I have my liquidity levels, drawn in. I see that external sell side swept. We have an SMT at the lows. In my opinion, the draw on liquidity, which would be low-hanging fruit, right? The easy draw on liquidity would be this first. Now, this would also be the external level that we would be hunting, but I also want to look for, is there any equal highs or equal lows? And I know a lot of traders don't take advantage of equal highs and equal lows. And you might be asking, Justin, what's so special about equal highs and equal lows? But the reason is there seems to be a lot of liquidity at equal highs and equal lows, and they will always get hunted. If you look at your chart, draw it in every single day. If you see equal lows or equal highs, they will always get broken. Always. Now, it might not be the same day, but it'll always come back to those areas to break those equal highs and equal lows. So I like to target, if I'm in a trade, if I'm long biased, I want to target equal highs and equal lows as areas of, they will act as a magnet, right? Liquidity likes to act as a magnet. So if I'm looking at this chart, and I start to zoom in a little bit, maybe going to the 5-minute. If we break above this, right? If we pull back to this fair value gap, we continue to hold, and then we go to buy side, and we break this level, and we don't get a reversal, right? Because if we break this level, I'd want to look for a short, right? I'd want to look for some sort of short position. Once we get the sweep of the 15-minute high, I would want to see some sort of, break a structure, then a fair value gap. But if I don't see that and we get strong volume, where are we most likely headed towards? All right, so let me look over here on a 5-minute. Do we have any sort of equal highs here? Right now, we don't have really anything. Boom, right here. We have relative equal highs by these two highs put in that I think would be a draw on liquidity. The market likes to go to these areas and acts as a magnet. Again, notice in your charts, start drawing them in, equal highs, equal lows, especially during the day. One of my rules that I've created for myself is a lot of the times I will not take a trade if there's equal highs above or below me, which is saying if I'm long biased and there's equal lows below me and it's on a smaller time frame, I most likely won't take. I'd want to see those equal lows being taken first before actually entering into that trade. So we basically have what we want now. My bias is bullish. Everything's telling me we're bullish. We have sell side swept. We had a big displacement up. We're pulling back into fair value gap. We have SMT with ES at the lows. ES, low hanging fruit liquidity. This is the draw for me. And the draw on liquidity for NQ would be this high and then these highs to come. Now, what does my strategy entail, right? Because if I'm bullish for the day, I could still maybe take a short trade, right? So how does that work? Well, I'm bias is bullish at the open, which means I'm bullish until one of these levels gets hit. I'm bullish until this high or this high gets hit. Once this high is hit, I now flip my bias bearish because I want to trade whatever that liquidity sweep is. And I won't trade that liquidity sweep unless I get all the criteria met for my trade, which means I need to see internal liquidity swept, a break of structure with big displacement, meaning I don't want to see a little push through the high. I want to see a big, a big push through that, whatever that level is. And then a fair value gap. And that's how I know that liquidity's been swept. We're most likely going to reverse. For example, let's take a look at a possible trade on NQ today. Now, I alerted this to the group. Unfortunately, I couldn't take this trade because I was driving to the gym, but it's a perfect example, right? So even though my bias going into today is bullish, I draw in my highs and the lows. So let me go back and replay today. Opening on NQ, we're bouncing at the lows. Again, we don't have this SMT here yet, any of this stuff. 15-minute on NQ, we draw in our highs and our lows. Okay, we have this high here that we made. Now we want to draw in the low. All right, so we're in this range now. So now I want to see either this low or this high taken before I actually take a trade. So we're pulling back into the fair value gap. Let's go down to a smaller time frame like the 5-minute, and we'll see what happens. Internal swept on the low. Now, we'll see if there's actually any long setups here as well. Any long setups to possibly target buy side, because we know this high is the draw on liquidity, and you have to have confidence in that. I am confident that this high is going to be taken. Why? We have sell sides. We had sell side on external level taken. We had a massive move to the upside with big displacement. We have a fair value gap created. We're bouncing back into this fair value gap. We're holding this fair value gap. We're bouncing off this fair value gap. So now I treat this like the same thing I would if we swept liquidity. We have internal sell side swept right here. Now I actually want to see if ES was forming a low at the time because I'm actually not sure if it was. So I go to a 5-minute on ES. And I want to zoom into whatever this point was. And surely know it. And the more you guys watch this price action, the more you'll be able to tell when there's an SMT there. Just looking at this, I can tell there's an SMT without even looking at ES, but I'll show you right here. Right? ES is now forming a higher low. ES or NQ is forming a lower low. So this is now SMT formed at the lows, and we're getting that immediate bounce that we want to see. So now I want to see some sort of break of structure, okay? So we have a break of structure at the high. Going to continue to play this. We'll see if we get, big displacement. We get displacement. Pull back into this fair value gap on the 5-minute, gets instantly bounced. This could have been a long opportunity. Now, one thing I also want to draw in is if we look at this on a 5-minute, I want to zoom in a little bit more. We also have a breaker block. Now, a breaker block is another ICT concept, and it's when you have an order block and you pull it over to the side. And this is going to be an area for possible entries, possible confluence where you want to, if I'm long biased, I would want to see a pullback into this breaker block and then push to take out buy side liquidity. So looking at going into a 1-minute now, we'll see if there was any setups before buy side liquidity was taken. We'll zoom this up a little bit. Again, I would want to see this high be taken for me to get a high quality trade. For me to get a high quality A+ setup, I need to see some sort of liquidity being taken first. So there we go. Market opens. We get an initial sell-off on NQ, pulling back into this fair value gap. Notice on a higher time frame, like the 5-minute, we have this 5-minute breaker block here. Notice how we continue to hold this. We do not break this level. Now, it might look like on a 1-minute, you're like, oh, well, it broke below, but, we're trading off of a 5-minute PD array. It's a 5-minute breaker block. So you have to trust the 5-minute candles, not the 1-minute. If you're too zoomed in and you're trading higher time frame levels, you're going to get faked out a lot. So we never ended up breaking through this, continuing to hold this past breaker block, as well as continuing to hold this fair value gap that we have on the 5-minute. And now we start getting bounced back up. So this, to me, now the draw would be this high, right? On a bigger time frame, the draw on liquidity would now be this high here. So is there any potential setups? It looks like there is one right here. Now, this would be a possible trade. Let me replay this. Just go back a second. And I'll show you where it would be. Now, once I get confluence here, and I also want to see if there was an SMT. This looks to me like there would also be another SMT here. I'm going to take off these things because they are a little, blurring the chart out a little bit. But we know it's there. I want to see if there was an SMT at the lows here. It looks like there could have been. We'll see. It doesn't look like there was. Notice how ES also formed a lower low, NQ also formed a lower low. So there was no SMT. But now that we get a bounce, right? We know there's a 5-minute breaker block there. We know there's a 5-minute fair value gap. We're continuing to bounce. I'd want to see some sort of, big displacement now. Notice that there was not a single fair value gap created this entire day so far to the long side when we're long biased. So I want to see some sort of displacement. When I say displacement, I want to see, large pressure into the direction where I think the draw is. And in this, time frame, on a smaller time frame, the draw on liquidity would be this high. So playing the replay, want to see large displacement, no fair value gap, and then there we go. That's the first really fair value gap that we get that's clear to us. We get a big area, we get, big displacement. We're bouncing on this 5-minute fair value gap. We have a 5-minute breaker block. We're biased overall. We have an SMT. We swept liquidity on a bigger time frame, right? We want to align all these things to give us the best possible trade we can possibly take. So this right here, a pullback into this fair value gap would be a potential long setup. With your stop, I would put my stop most likely below this wick, and I would target what I think the draw on liquidity is, which would be this buy side level. So you can see we get bought up. We hit the buy side level. That would be my take profit. Beautiful trade there. So now I wouldn't touch anything. Now, you might be, Justin, why would you not take a short setup off this high? Because I want to see a bigger time frame high being taken. And the reason I wouldn't take a short setup on this high being taken is because if we zoom out, we're still bullish overall. I think the draw on liquidity is this high. So we could basically go right through this and head to buy side up here, because on a bigger time frame, the draw on liquidity is this high. It doesn't matter if we took this 5-minute high. I need a bigger time frame high to take some sort of short setup. So you can see we automatically don't sell off, or actually we do sell off. I think, we sold off and then we stormed SMT at the lows. Again, I would want to see a 15-minute, 30-minute, 1-hour high being taken for me to take a trade. Think it gets to the draw on liquidity, and I want to see a clean break of it. I don't want to see equal highs. Equal highs means that'll most likely be targeted. It'll be broken through. So now I get what I want. I get a break of that high, right? So now what do I look for? I have my first trade thing that I want. Liquidity swept. That's the first thing I want to look for. So now I zoom in. Go to a 1-minute. And I want to see internal liquidity swept. So I can see internal swept right here at the highs. We have internal swept. Now I want to draw in my same thing that I draw on my bigger time frames. What's my internal sell side here? Internal sell side, this low right here. So we have buy side up here, internal buy side that was taken. Now I want to see a big push back into this range with, large selling pressure, and I want to see some sort of low being broken. Right now there's no really low, so I'd want to see some low be created and then broken. So we can see we're continuing to head higher. Again, there's no trade unless I get what I want. Still nothing, and then boom, there we go, right? So we have a low here, right? We had equal lows here. We broke through it. I'm going to take off this external level so we have some room. So we have internal buy side taken, market structure shift or break of structure, whatever you want to call it. And now I want to see a fair value gap. So I want to see a big push through this. I don't want to see, a little push and then right back up. That's not what I want to see. I want to see if it's a market structure shift and the market's ready to reverse, it'll show you it's ready to reverse. So right when it breaks market structure shift or break a structure, whatever it is, I want to see a big move, a big candle. I don't want to see a little push through, right? And here we get that exactly, right? We get a big push down and we get a pullback to a fair value gap. So that would have been your entry right there. Let me go back a second. Once I get that market structure shift, I take whatever the first fair value gap is. The first fair value gap created after we break structure. So we can see this is the first fair value gap created after we broke structure. And this would be my short setup. And my first target for this would be my internal sell side level, which would be this low right here. So we pull back, I enter short. My stop would be the most recent high, which would be right here, or the top of the wick of the fair value gap if you want to keep it tight. In this case, I would most likely give it a little bit more room. My first price target would be sell side liquidity. And my second price target would be either any equal lows, right? We want to target equal lows. And then we also want to target whatever that external sell side level is. And if we're looking at this right here, our external sell side level is not until this low. So this would be my runners. And keep in mind, look, we also have equal lows stacked here, 2 equal lows, as well as it's our external sell side level, which is something we want to pay attention to. So we get our short setup, let it run, see how this plays out. Again, we have everything we want. External liquidity swept, internal liquidity swept, market structure shift, pull back to fair value gap, exactly what we want. First price target would be hit right there. And then we'll see how the runners played out. And then most of the time, I would start scaling on whatever the lows are. So I'd take, whatever the lows are, or if there's a weekly opening gap, I'll also target those areas. And also if there's some sort of, unfilled fair value gap is where I'd also take trades. So we'll speed it up a little bit. Again, once I take that first profit, stop goes to break even. And then you can see right there, that last target would have been hit right there. And this would have been a 9.5 risk reward trade. So this would have been a beautiful, beautiful short setup. So everything I want to see, right? So even though my daily bias for the day is bullish, I need to understand what the draw on liquidity is before entering a trade, right? If I don't understand where we're most likely going next, how can I expect to make a trade if I'm not confident what the market is going to do? So looking at this right here, the draw on liquidity to me, let me take off all these old drawings now. Since this high was broken, the draw on liquidity would now be this low. Now, I don't really care that we took this low, but this should be the draw. So let me play this out on a bigger time frame. There we go. So it did get broken. So notice how we go from buy side, take buy side, go back to sell side. Once we take sell side, we most likely go to buy side. So after we've taken this low now, what do you think the draw on liquidity is? It is now this high that we put in. So going into, let me go back off replay, going into tomorrow, right? We have liquidity taken. Now let's see if there was any sort of setup here. I don't think there was because we had earnings. A lot of tech companies had earnings, so we just kind of boosted up. Not really any sort of setup here. Actually, there could have been a setup here. We have internal liquidity swept. Break a structure, recent high, fair value gap created. Pull back to the fair value gap, enter long, targeting most recent high, which would be this. That would be your first take profit. So this would have been another trade as well, right? You can use this model on any time frame. That's why I use it on a bigger time frame to get whatever my daily bias is. And on a bigger time frame, we are getting a buy model. We have external swept, big move back up, pull back to fair value gap. I'm expecting in the coming days, I would much want to see a bull push than we could sell off. Now, we can sell off. It's not like the market can do whatever it wants. But we're using, trading is a probability game, and I understand how that works. So I'm going to use my experience, how I trade, to use that to my advantage. And based off how I trade and how I trade off liquidity and the draw on liquidity, I want to see whatever those levels are get taken out for me to take some sort of trade. So if I'm looking to take some sort of trade now going into tomorrow, my bias is bullish until buy side liquidity gets taken, and then that's where I take a trade. Now, I can take a trade targeting buy side. If I get some sort of setup, like let's say we pull back into this fair value gap on a 15-minute, and then we get a 1-minute setup, right? Because I like to trade on a 5-minute, 1-minute, smaller time frames to perfect my entries. This now becomes internal buy side liquidity. Let me zoom into a 1-minute here. So what I would want to see is, since I'm bullish, we're in a 15-minute fair value gap, I would want to see this. Pull back into the fair value gap, internal liquidity swept, market structure shift, pull back to fair value gap, and then go target buy side. I'd want to see that on a 1 minute. So I'm stacking these models, right? I'm using my model inside of a 1 hour model. That's how you perfect your entries, get the best risk to reward. And I'm confident in the draw and liquidity. The draw and liquidity is obviously this high, and then it's this high, right? So I'd want to see internal liquidity swept at the low, market structure shift with big displacement, and then some sort of PD array, fair value gap, order block, whatever it is. Most of the time I want to see some sort of fair value gap, and then your stop would be the high or the low or the high, whatever it is, or the wick of the fair value gap, whatever it is, right? So that is pretty much it. That is how I form my daily bias. Again, the biggest thing that you should take away from this is understanding the draw on liquidity. Now, this takes time. It takes experience to be able to build confidence in what you think the draw on liquidity is. But once you get it, it will make so much more sense to you. And the reason is because you stop thinking about the market in just, random moves. Everything is very, very precise in the market. The market is moved off of algorithms. The market doesn't move off you and me. It moves off of algorithms. And the algorithms are very precise. And you'll realize that we hunt and draw to certain areas. And most of the time it's to gather liquidity. So when you start thinking of the market in the draw, what is the draw on liquidity? You start building confidence in where you think the market's going next. And that is something that takes time. But once you get to that point, you get that extra level of confidence. And it makes just trading so much more easier. And once you have that confidence, you perfect your edge, perfect your risk management, and you have a system that can change your life. So thank you guys for watching this video. If you did learn something from me, please subscribe, leave a like, leave a comment, whatever it is, show some love. I love teaching. I love teaching you guys. It's so fun for me to be able to share my strategies with you guys and stuff like this. I plan to do a lot more educational content like this in the future. I do a lot with the Discord. We do charting sessions every night. So I thought I would, help out everybody that, isn't a part of the Discord and start creating more free education for people, since there's a lot of free education on YouTube, but a lot of it is not, it'll turn traders into, give them bad habits, bad strategies that just don't work. So I really want to create more content for you guys, push you down the right direction. And yeah, so I hope you guys enjoyed the video, and let me know if you want to see more content like this. So peace out, guys.